G'day folks, welcome back to another update regarding high-grade copper and US crude oil. Now they've both pooed themselves in the last day of trade. They've both dropped suddenly. We're going to include some back testing and make sure you hit that like and subscribe button to support the channel. Also, don't forget to reference the +1 videos to go get a deeper dive into some of the trading strategies. Now, as a latest fundamental analysis, copper fundamentals remain relatively supportive, anchored by supply challenges and secular demand tailwinds, but can be volatile due to macro headline risks. In contrast, US crude is under pressure from rising supply and weakening demand, leaving little buffer against negative shocks. In the most recent session, copper was hit by trade conflict fears, while oil was dragged down by reduced geopolitical premium and overall risk aversion in markets. Also, stay to the end and we'll review our Patreon bullish shares portfolio and show you how it's performing. So looking at US crude oil first, on the weekly chart, the price has been below the moving average, and the moving average band has been declining for a number of months now, actually a number of years possibly, and we're still trending lower. There's no divergence yet on the weekly. On the daily, likewise, very bullish, bearish at the moment, and you see here we had a bit of a consolidation period along that period around about middle of August to today, and it's finally broken to the downside. Whenever you see that consolidation of that moving average band constricting, that's a consolidation. And what you want to see is the moving average band widening and showing more of a down or uptrend. Whenever you see that on both the CCI and the price, it's a bit of a downtrend and when you see this consolidation period, just hang off trading if you can until we see a break one way or the other. In this way it was generally trending against any bullish movement as seen here by the weekly chart. That's why we look at the higher time frame. So bearish at the moment on the daily as well, and on the hourly, very strongly bearish move to the downside, and still no sign of a pullback yet. Now, if I zoom out for a moment on the daily, going back to the daily for a minute, there is a support line down here at 55.20, and it may very well come down to that level there before possibly stabilizing. Now, if we go to the back test, again, using the daily, if you're trading on the hourly, using the daily as a trend, so you would have been going short from this period, indicated here by this arrow, and that was around about the 5th of August. So going short when the daily is in a downtrend, but also when the hourly is in a downtrend, and closing out trades whenever you see a little bit of a move to the upside of the moving averages, especially on the price and the CCI. Now, in this little period there, for example, there was a bit of a drawdown on your accounts, and you can see there, looking at the 1 hour time period there as well, but also at the daily, indicated here by the CCI touching the moving average band, you would have closed your positions, short positions at that point there, giving you a nice little move above. Also notice is here, if I zoom in just a bit, I like to zoom out because I like to see these moving averages as opposed to focusing too much on the price itself. And if I drew a trend line from that point there, you can see there that's double bottom almost on the price versus higher lows on the CCI, and it bounced from there. And what you look for is any divergence, and there's not much to see there. They're all moving in line with the price, the CCI movement. The last divergence we had was back here. We had almost a double top there on the CCI versus higher highs on the price. That's a bearish divergence, and it dropped off quite strongly. Going back here, that was moving in line, so that was okay. And at the moment, no bearish divergence on the hourly. But again, going short whenever both the trend lines are in a downtrend on the CCI and the price, and avoiding holding positions whenever they go against you, and that way you would have avoided these drawdowns and multiple contract entries. Here there was another drawdown again, closing it out whenever you see those moving averages start turning up. Now looking at high-grade copper, we did have a bit of a bull run back here in the start of the year. Then we had this massive fall that was in July, late July. And since then it's been pretty much in a bearish momentum, but it's actually been and recovered. Now notice the price is above the moving average band, although that moving average band is very narrow, and the CCI is into that moving average band, giving us a neutral signal. So cautiously bullish during that period back there, as indicated here on the daily chart. And I'll show you the back test in a moment. But again, you would have been going long during this period and taken a short entry. Now that was a short entry probably from that point there on that candle, and then started going long from this period, from that candle there, or from that arrow. But at the moment it's working backwards. Again, you'll notice we're currently in a neutral positioning. The CCI is in the moving average band, and so is the price. So avoid going long or short until we see a decisive move one way or the other on the daily if you're trading on the intraday. And the 1 hour chart has this massive bearish divergence versus the price, higher highs on the price. And what it's done, it's actually retraced quite nicely according to that divergence. And that's why I say always pay attention to divergence. And what we do is we measure it. So we take it back to the significant low, probably to that area at the very least. But even to that low back there, you can see it's broken down near the 50% level. So it depends where you draw the divergence. At that point there, the 50% retrace, it's broken easily through that 23-38% Fibonacci range. Now, as I said, we might see it come back towards this support line at 47.526 before stabilizing possibly. Of course, you can keep it actually dropping. Now, if we go to the back test, looking at the, let's look at the down side first, the bearish trades. You would have taken short positions back there, a couple of little trades there. Had you got into that trade early, you might have scored that massive drop there. And then since then, you would have avoided going short, even though the back test kept running. You would have avoided going short because the CCI was giving you a bullish momentum, and so was the price. But notice as well, during that little period on the daily as well, you would have closed it out the very latest at that point there when the CCI touched that moving average band on the daily, which equated to this period here on the 1 hour chart. So you would have avoided taking these short trades. So that's how you avoid going short. Always go with the trend. And if you go to the long positions, again from this arrow on the daily, indicated here on the 1 hour chart, you would have taken long positions when the CCI and the price were in an uptrend. And when they both started turning down, you would have closed out your positions. But also paying attention to any divergence. You had a bearish divergence here. So if you're going long during that period, even if you didn't close it out at that point there, you would have avoided adding more contracts to it. And you would have noticed a bearish divergence, and you would have closed it out, or you should have closed it out at the latest at that point on when the moving averages started bending down. Again, during this period when the prices are rising, you would have paid attention to these bearish divergence. You'll notice here, that was a slightly lower high on that point. That was a higher on the price versus that point. That was your first true indication of a bearish divergence. But you'll notice the price was still above the moving average band until that point. That was your second warning, if you like. Then the moving average band started turning down. No contracts entered. You should have closed out if you already had positions open at that point. Then the price kept rising. But notice again, the CCI kept dropping. And that would have been another little warning there in that little range. That was another bearish divergence until finally broke down. And that, again, he had a few hours notice before the final plunge if you're going long. Now, here, you may have got in at that point there. If you're watching this on the hourly, you got in there at the close of that candle, and you would have been in a few pips there. Now you hold on to it until the CCI touches the moving average band. So for added benefit, consider subscribing to the Patreon page where we look at bullish shares each week. And this has just been a few shares we traded since the start of September, and they've returned 9% so far in terms of gains, and equivalent to about 3,300 in monetary gains. So again, the Patreon page, links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next update.